What is a family pledge or guarantor loan? Well, in simple terms, what we're saying is that parents or family members can put up a security to help a child buy a property. Now, why is this needed? Well, in Australia, we do know that in the bigger cities, prices are still increasing more and more. And as they increase more and more, it's becoming harder for the children, our children, to get into the market. So a family pledge loan or a guarantor loan is about putting up further security to assist your children buying property. Now, how it works is, imagine if your son or daughter wanted to buy a property and they only had a 5% deposit. Well, that 5% deposit would mean that they're in mortgage insurance territory. Now, mortgage insurance is an insurance policy that protects the bank against the borrower defaulting. So if the borrower defaults and the bank doesn't get their money back, they call in on the insurance policy to ensure that the banks get their money. Let's face it, banks never lose. So what this is doing, you have to pay a premium for that insurance policy, and the borrower pays that premium. And in some cases, that premium can be as much as $20,000. So you could imagine helping your child by saying, if you've only got 5%, but you've got a really strong income, then we'll put some of the equity we've got up in our current home or in one of our investment properties. So the bank takes a limited guarantee against that security for the period of time that the value of the property you're buying and the loan against that property is above 80% on the loan to value ratio. Now, as that property price grows over time and the debt starts to come down and there's a 20% difference, then we can release your parents from that guarantee. Okay, so it allows the children to get into the market. It makes them that they don't have to pay this expensive one-off premium that protects the banks against your son or daughter to get them into the market. So it can be a really great thing to look at getting them into the market sooner before property prices continue to keep growing and they're out of the reach of the average buyer. Now, there are obvious risks, and those are laid out in terms of the guarantor agreement. And it's important for you to seek independent advice to understand what those risks are. In other words, let's say your son or daughter buys a property, say off the plan, and that property they pay $500,000 for, and the value of that property is $450,000 at completion. And for whatever reason, they can't service the mortgage, and yet you've borrowed $500,000. Well, the bank will call on you to pay out the difference. And that could mean that you have to foreclose on that property or you just pay them back over time. At the end of the day, the banks aren't going to lose. So it's important to understand the risks versus the rewards. Now, if you've got faith in your son and daughter, I'm sure they're going to be committed to this long-term adventure in terms of buying and owning a property. And that's what you need to sit down and talk about and then go and get your own independent advice. But it certainly does help your children paying or saving the costs of these very expensive lenders' mortgage insurance premiums. And that's why we say they're worth considering when you're doing your research. Thanks for watching.